Hello, Ms. Partner. I understand that you're trying to go into the childcare industry. So I know you also wanted to open up a business called Plano Day School. Well, for that business, I would recommend forming it as a limited liability company, otherwise known as an LLC. The reason why is because the tax implications are fairly good for you. Just like a partnership, it's a flow through entity, which means that the earnings flow directly to your personal income tax return. Also, the liability is like a corporation, which means that it's limited. It's limited to your capital contribution that you put into the company, and it doesn't touch your personal assets, which would be good because childcare, there's a lot of liability with kids, making accidents. Parents are very precious with their children, obviously. So you just want to make sure that you're going to not get sued for your personal assets if anything did come up in the business. Also, there's a lot of flexibility if you were to do an LLC manager managed. So what that means is that you would be the manager and you would be able to make the decisions, and the others would be kind of just like the investors. The other members would just kind of be the investors, and you would make most of the decisions. Also, if there was a disassociated member, it wouldn't dissolute the business by closing it down. You'd still be able to run. What I wouldn't recommend is a sole proprietorship. The reason being is because that can go against your personal assets. Everything that is the business is also your personal. You're also not able to raise capital. The tax just goes through your tax return. It's just a lot of ways to go after your personal assets, and like I said, with this childcare industry, you have a lot of liability and you wouldn't want that. Another thing I would not go into is general partnership. The tax implications are just like the LLC. It's like a partnership with a flow through goes to your personal income tax return. That's great and all, but the liability isn't. You would have personal liability of your assets as well as your capital contribution. With a limited partnership, it's kind of the same thing in your regard. I also wouldn't recommend it. What it is the tax, great, partnership flow through goes to your income tax return, but the liability for the general partner, which would be you, has personal assets attached. They could go after your personal and your capital contribution. While the limited partner, which would be any others, would just have a liability for the capital contribution. That's great for them, but not for you, since I know that you're really wanting to have a lot of flexibility and control over this business. Last one I wouldn't recommend is a corporation. This is kind of complex for your industry. I know you just want to open one single daycare in your town. So, for the corporation with double taxation, you could be a shareholder and also try to be on the directors and officers board. There's just a lot of complexity with this. In order to get the money, if you were a director and officer, you could get salary, but then the shareholders would give dividends. Corporation is taxed when it gives out dividends if it decides to that year or anytime throughout the year. It's not required to. And then they would then have you get taxed at the personal level on the same amount of money. So your business makes money, gets taxed, then you get that money in your pocket, you get taxed again. The liability side of it is good. You have limited liability. Your personal assets aren't attached, everything's great. But like I said, it's very complex and I wouldn't recommend it for you. So overall, I would recommend the LLC, Limited Liability Company, for your business for Plano Day School in the child care industry. If you have any questions, let me know. I'd love to go through them with you again. Thank you.